Hi, my name is Teresa Tims, president of TDR Mortgage in Upland, California, and you can find me on the web at thesocalloanpro.com. Today, what I wanted to share with you is my experience and the mechanics of what it takes to get an investor flip under 90 days through an FHA loan or a conventional loan. I have a lot of experience with investor flips. From the early 2000s, probably about 50% of my business was people purchasing investor flips. And in our market today, you can find, I'm going to say out of the 100% of properties for sale, about 50% of those properties are short sales, 25% are REOs, and about 25 to 30% are standard sales and investor flips. And when a property is purchased by someone who intends to go in, rehab it, and resell it, and they sell it under 90 days, there's a strict criteria that you need to adhere to get your loan closed. When you're purchasing FHA, when it's an investor flip and I know that I've got a buyer that's going to go into escrow, the first thing that I do is I look at title. I want to know when that property transferred title. That's the number one. Whether it's FHA, conventional, VA, you want to go look and see with the title, see if there have been any title transfers. There are different rules and exclusions for people that have bought as an individual and then transferred into their corporation. So number one, look at the title history. Number two, you're going to educate your borrower about the additional steps required if it's a flip under 90 days. The biggest thing is that there's going to be two appraisals, so the value is going to be very scrutinized. The other requirement that FHA has is you have to turn in the home inspection report. If you've ever seen a home inspection report, it lists every teeny tiny flaw that a house could have. So even if you've got a great house, it could be built in 2006 or it could be built in 56, there are going to be things wrong with it. There are going to be hairline fractures in the stucco that are purely insignificant, but are going to be called out on the home inspection. So this home inspection gets scrutinized by the underwriter, and the underwriter will come back with a list of items that need to be repaired. And it's supposed to be items repaired that are related to health and safety. And those all need to be fixed prior to the close of escrow. I think this causes a lot of problems with sellers that are inexperienced about investor flips. And, you accepted an FHA offer. There are flaws wrong with it. And in order to get this deal closed, you're either going to fix them or you're going to go back to the drawing board and maybe you're going to renegotiate the closing costs or the sales price or whatever that needs to happen to get it taken care of. When another problem that we run into are, there's two appraisals. So you don't just have one appraisal, you've got two. So one of the things that you need to do is, as a listing agent or even a buyer's agent, if you have an interest in getting this property closed, somebody needs to meet the appraiser at the property. It's really the listing agent's job to do so. The listing agent is going to go out to the property, meet with the appraiser, preferably give the appraiser comps to show how you arrived at the value. If you're listing the house at $300,000, surely you arrived at that from somewhere, and that's through your sales comparables. So you're going to give, assist the appraiser. Don't just assume he has access to the same data set that you do. Give him your comps. Also, give him a list of repairs that was provided to you by the seller. Have them itemize every single repair. I've got a list that I'm going to share with you and hopefully be on the screen here soon. But one thing that I like to do is, when you go and buy a house, and let's say you buy it for $200,000, you were probably given that opportunity because you paid all cash for the property. And you're going to take on the burden of all the repairs and the expense of the repairs, the holding costs and things like that. So you might have purchased it for $200 and now you're selling it for $300. But certainly you're not pure profiting $100,000. When a layperson is looking at those numbers, they don't always take into consideration all of the costs associated with the property. So, you've got 10% costs for, I like to use 10%. It covers the the listing agent and the buyer's agent's fees, and then another 2% for closing cost allowances, another 2% for buyer's costs. So for me, that's an easy number to fit in. And then you want, if you have hard money expenses, you want to put in all of your holding costs, and you want to itemize all of those things and then come out with a bottom line number. I really think that when an underwriter sees this and it goes to document the file for later, I just think it's a really great thing to have in the file and to support how you arrived at the value and why you're selling higher. They might come with a bottom line and see that you're only making, $30,000, not the whole $100,000. That's a big difference. Let's see what else. Okay, so we talked about the appraisals. Okay, then the first appraiser goes out there. Well, now you've got a second appraiser that's got to go out there. So why not, when you're meeting the appraiser, give that appraiser a copy of the first appraisal? To me, let me get rid of this phone call. To me, that only makes sense. Why wouldn't you want to share with the first appraiser or the second appraiser what the first appraiser said? And your goal is you want to get that value in. Your job is to help your seller and help the buyer and help the transaction along. So you want to do that. Another thing, let's see, there's so many little intricacies that you have to look out for. So those are just like when I'm doing one of these deals, those are the things that I look out for and that I prod the listing agent and the buyer's agent along to, make sure these things happen. Another important thing is, when you submit the file you've got appraisers going out and you need to hit your value and you know that the property's worth that or whatever, otherwise why we've listed it at that. I like to use a company that gives the full fee to the appraisers. Not many companies do that. So the company that I use, they do that. They give the full fee to the appraiser. So guess what? The appraiser might be able to afford to work a little bit harder to find comps that are maybe not cookie cutter comps right in the area that you're in. Sometimes appraisals aren't exactly, cookie cutter easy, like track homes to do. So you might have to go outside the area, and getting a full fee is incentive for the appraiser to maybe work a little bit harder than if they're getting, $200. Okay, what else? Hopefully this is a time when I can put something up that can take some of the dead space away right now. I'm kind of talking off the cuff. Okay, so that was FHA. For conventional loans, the general rule is there's not a rule, but any time for investor flips under 90 days, that if you get an appraisal and it supports the value, you don't necessarily have to provide a second appraisal, but a lot of lenders do. A lot of lenders, one of the reasons why investor flips are so highly scrutinized is because out of all the areas of loans, this is one area where they see the largest amount of fraud. So lenders are the most cautious of investor flips. Being that that's a big part of our market, we just have to figure out a way to work around that. Okay, so on conventional loans, all lenders have certain rules. Some of my lenders say, I won't do investor flips under 90 days if it's conventional. I have other lenders that say, yeah, we'll do those all day long. We're going to look at the appraisal and run what's called an automated valuation, AVM, automated valuation model appraisal. And if that comes within a 15% variance, we'll condition for a second appraisal. So there are all different types of ways that lenders QC the value to decide whether or not they're going to condition for a second appraisal. But on conventionals, that home inspection report definitely doesn't play in. So, now on the buyer side, setting the buyer up for an investor flip, there are a lot of different things that I do with that. And one of them is that, sometimes I always let them know that there's 2 appraisals. So it's going to cost you twice as much for the appraisal. And then you have the home inspection fee, which is mandatory in the FHA under 90 and, not afterwards. So anyway, so you can see that there are a lot of intricacies to the investor flips under 90 days. And it would be wise of you not to trust someone that, has not had experience with these types of transactions. And I hope that from today you can see that I do. And I'm more than happy to help you take a look with one of your buyers looking to purchase an investor flip, or if you're a realtor that lists these investor flips and needs someone to QC your possible buyers and cross-qual your buyers. If you're visiting me for the first time, please don't forget to subscribe. And I'm looking forward to hearing from you. Pick up the phone. Call me at 909-920-3500. Have a great day.